Hi everyone, welcome back to my channel. This video is my usual weekly or bi-weekly technical analysis outlook on currencies and stocks. I am making plans for videos that are related to currencies, stocks and finance in general, so please subscribe if you like such content. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's begin. The first part of this video will be reviews of the names I've covered in past videos. This week will be on sterling dollar, Aussie dollar, euro kiwi, gold, dollar yen, sterling yen, Richemont, Danaher, Netflix, Wells Fargo, Glencore, Bristol-Myers, and Starbucks. The new coverages are euro yen, euro sterling, Dell Technologies, and Freeport-McMoran. In case you don't want to know about the old stories and just want to get straight into what's coming up, I have put in timestamps in the description for your convenience. Also, I'd like to inform you that I will not be uploading videos on technical analysis outlook in the next 3 weeks, as I do not want to overstretch my coverage and just want to see how my current calls perform. As a replacement, I will start uploading educational videos that break down the basics of the financial market. My first review will be on sterling dollar, last closed at 1.2910 on the 19th of July. Now you can see that sterling dollar last week and this week reached two of its two resistances, 1.2865 as well as 1.3, the psychological resistance, but evidently this week it failed to break above this psychological resistance and was rejected. Doesn't matter. The outlook for sterling dollar remains bullish, and I've said before in the last video on the 7th of July, breakouts are often, but though not always, accompanied by corrections to around the point of breakout. Upcoming declines are just part of the bullish progression. They are considered to be corrective in nature and are expected to bounce off supports before resuming the upside. Next, we have the Aussie dollar, last closed at 0.6684 on the 19th of July. This is also another example of how after pattern completions, there usually are corrections. This correction could reach the trendline support over here before bouncing higher. The first target remains at 0.6871, followed by the psychological resistance at the 0.7 level, then 0.7155. If you want to know what the textbook target is, it is excessively high. Do watch the previous video last week. The symmetrical triangle I showed in the video on the 22nd of June did not work out. Euro Kiwi last closed at 1.8112 this week, completed the triangle over here, which is supposed to be a confirmation of a bearish outlook, but then it rallied strongly to invalidate this pattern via a breakout above the resistance trend line. So a bullish outlook now prevails, and I will cease coverage on this cross until there are new patterns being formed. On gold, it last closed at 2400.82 on the 19th of July. In the last video on the 30th of June, I said that a new outlook will be determined by a breakout or a breakdown from this rectangle pattern. Gold had a breakout on the 16th of July and corrected, which is what I've said earlier to be a common occurrence after pattern completions. I expect a bit more decline from here before bouncing off some supports either at the psychological support at 2400 or at the cloud support around 2363 to resume the bullish trend. A breakout is a bullish confirmation, and the textbook target is at 2582.97. Dollar yen last closed at 157.38 on the 19th of July, had an early breakdown. The rising wedge is now complete. The textbook target is at 149.5. Now, after the bounce off the cloud support over here on the 18th of July, there may be further upside as a result of this bounce, and I expect the formerly support trend line over here to reject dollar yen lower. A clear breakdown below the cloud will add to dollar yen's downside strength. On the sterling yen, last closed at 203.36 on the 19th of July, has completed its rising wedge, a bearish pattern. The textbook target is at 195.54, but remember, do not expect sterling yen to go down immediately, not in a straight line. The next few supports are at, let me just show you the lines that I've drawn. They are respectively at the 200.76 level, 199.1, as well as 197.26. These levels could bounce sterling yen higher to end its bearish trend. Moving on to equities, in the last video on the 30th of June, I said that bearish potential is still there for Richemont because Richemont failed to hold above its 20-week simple moving average. It last closed at 133.20 on the 19th of July, and it finally broke below the Ichimoku cloud support to extend its decline. Further downside is of course expected from here, and a close below the neckline at 125.45 will complete this double top, a bearish pattern. Now, Danaher is a good example of how pattern completions are often accompanied by corrections to around or slightly above the neckline before resuming the downside. Danaher last closed at 243.54, did just that. After failing to hold within the Ichimoku cloud and closing below the 20-day simple moving average on the 18th of July, further downside is expected. I will not repeat my speculation about what will ultimately happen to Danaher in the longer term, but if you'd like to know, please watch my video on the 7th of July. The next name is Netflix, last closed at 633.34 on the 19th of July. The rejection last week over here at 961.72 has pushed Netflix closer to completing its bearish pattern. Once there is a close below the wedge support, a bearish outlook is confirmed, and I expect a textbook move lower of around 195.63. Further information on Netflix, I have switched from a weekly chart to a daily chart, and now we are observing the price action on Friday 19th of July. This is very clearly a bearish signal, a bearish engulfing, in which the opening and the close both supersedes the previous day's opening and close, as well as the highs and the lows both superseding the last day's highs and lows. So this is one bearish sign. The second bearish sign was that intraday Netflix actually tried to break above the 20-day simple moving average, but was clearly rejected, forming, I would call this an upside exhaustion candle. And I would argue that Netflix has closed slightly into the cloud. Information on this is that if there is a close within the cloud, the expectation is that the price action would eventually close below the cloud. So there are three bearish signs just on 19th of July itself. Wells Fargo, last closed at 59.23 on the 19th of July, did exactly what I speculated. In the last video on the 14th of July, I said that Wells Fargo would eventually fill this gap and then form the second shoulder of the head and shoulders top before falling thereafter. And the second reason why I expected a rebound is also because this would then form a more ideal neckline at 55.6. Now we can see Wells Fargo has rebounded to close this gap, and it then fell for 2 consecutive days. So I believe Wells Fargo has formed the second shoulder of the head and shoulders top. What I need to see happening is that Wells Fargo fall further from here below the Ichimoku cloud to give this head and shoulders top a bearish pattern more credibility. Once it closes below the neckline at 55.6, then this bearish outlook is confirmed. The textbook target is at 49.34. I noted in the video on the 14th of July that Glencore may be forming a head and shoulders top, a bearish pattern, and Glencore last closed at 44.195 has completed this bearish pattern. The textbook target is 413.45. Now, seeing how sharp this decline is, I suspect that the next 1 to 3 days could be up days, first as a correction, then Glencore hits a certain resistance to resume its decline. I last covered Bristol-Myers in the video on the 14th of July, in which I said after the resistance trendline rejection over here, there should be further decline to the support trendline before bouncing off this trendline to make another attempt to break out. I was inaccurate about this. Bristol-Myers had an early breakout confirming the bullish outlook. The textbook target is at 46.03, but I would caution that there are two resistances, one at 43.37, which we saw on Thursday and Wednesday getting rejected, and then there's another resistance at a 45.71 that could also reject Bristol-Myers lower. I like the 45.71, and I will explain why if Bristol-Myers gets closer to this level. But in any case, a bullish outlook is confirmed. Bristol-Myers now has to break above the 43.37 level in order for further upside to continue. Starbucks last closed at 79.27 on the 19th of July, rallied on Friday to close above the 20-day simple moving average, giving this double bottom a bearish pattern increased credibility. Do not take this as Starbucks being bullish. There is still no confirmation, which will take place only with a close above the neckline at 83.43. But this week's move gives more optimism that Starbucks is gearing up for a recovery after falling from around 116. We now go into new coverages. I've shown you how rising wedges are being formed and completed in the dollar yen, sterling yen, and Swiss yen. So it's no surprise that euro yen is also forming one. This one is on the weekly chart, so we need a weekly close below the wedge support to complete this bearish pattern. If the bearish pattern is completed, the textbook move is 12.23 euros. The second new coverage that I have for you is on the euro sterling, last closed at 0.8417 on the 19th of July. It may have just bounced off the wedge support of a falling wedge, a bullish pattern. The next move is expected to be higher to test the wedge resistance, and if there is a breakout, of course it looks too early, but it's something that we have seen this week in the dollar yen and sterling yen. Once it breaks out above the wedge resistance, then there is bullish confirmation. The textbook move is 124 pips. Dell Technologies closed 125.79, had a symmetrical triangle breakdown on the 16th of June over here, so there is bearish confirmation now, and the textbook target is excessively low at 82.9. So do note that there are resistances at 114.57 as well as 105.16 that can support Dell Technologies, bouncing it higher and ending this bearish outlook. Now, I want to point out something here. We noticed that there is a gap down on the 17th of July, and if you remember what I said about Wells Fargo, gap downs are usually covered. Second point is that price action currently is excessively below the lower Bollinger, and this, in my observation, usually leads to 1 to 3 days worth of a rebound. So putting these 2 points together, I'm not surprised. In fact, I would expect Dell Technologies to bounce higher first to at least close this gap, meeting some resistance probably around the 20-day simple moving average before resuming its downside. The last name that I have for you in this video is Freeport-McMoran, last closed at 45.9 on the 19th of July. It completed a head and shoulders top, a bearish pattern on the 18th of July, so a bearish outlook is confirmed. The textbook target is at 38.97. Again, 2 points, like what I've said about Dell and Wells Fargo, there is a gap down on the 18th of July. And price action is excessively below the lower Bollinger. So these 2 points usually would lead to a rebound, especially to close the gap before resuming the downside. In any case, a bearish outlook is now confirmed. Textbook target is 38.97. The support levels that you should watch for are at 43.32 as well as 44.62. Both of these, I believe, could be strong enough to bounce Freeport-McMoran higher and end this bearish outlook. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video it will highly likely be on new crosses and names. If you like what I'm doing, please help me out by giving me a like, please subscribe and hit the notification button for more videos like this.